Market Summary, July 16, 2025. Executive Overview. Market Performance. U.S. equity markets open with mixed signals Wednesday morning, with the S&P 500 edging higher despite earlier weakness. The Dow Jones Industrial Average gained approximately 180 points, plus 0.3%, while the Nasdaq Composite showed modest gains, plus 0.1% despite overnight challenges. Trading activity was driven by second quarter earnings reports from major financial institutions and favorable wholesale inflation data that provided some relief to investors concerned about tariff-driven price pressures. Key themes. Bank earnings dominated market sentiment, with improved trading revenues offsetting concerns about investment banking headwinds. Meanwhile, producer price index data show a surprising flat reading for June, contrasting with the previous day's elevated consumer price index and offering markets some respite from inflation concerns. Federal Reserve, interest rates. Current status. The Federal Reserve maintained the federal funds rate at 4.25%, 4.5% for the fourth consecutive meeting, with policymakers remaining divided on the timing of potential rate cuts. The effective federal funds rate held steady at 4.33% through July 16, 2025, reflecting the Fed's cautious approach to monetary policy amid ongoing inflation concerns and trade uncertainties. Policy outlook. Markets now see a greater than 70% probability of a Fed rate cut in September, up from about 56% earlier, following better than expected wholesale inflation data. However, Fed Chair Powell's position remains under scrutiny as reports emerge that President Trump is considering dismissing him, with Bloomberg reporting that Trump was contemplating firing Powell soon. The central bank's path forward depends heavily on inflation trends and economic indicators, with tariff-driven price pressures remaining a key concern for policymakers. Digital currency markets. Bitcoin performance. Bitcoin experienced a volatile trading session, fluctuating between 116, 103, and 118, 315 before settling around 118, 233 plus 1.1%. The cryptocurrency continues to trade near record highs, with historical data showing Bitcoin at 118,763 on July 16, 2025, representing significant year-over-year growth. Despite short-term volatility, Bitcoin maintained its position above the 117.0 level, supported by continued institutional interest and ETF inflows. Market dynamics. The broader cryptocurrency market showed resilience, with total market capitalization at approximately $3.8 trillion. Ethereum gained 6.5% to 3,245, while other major altcoins, including XRP, plus 3% to 2.98, and Solana, plus 5.8% to 170, posted solid gains. The crypto market sentiment remained in green territory, indicating continued investor optimism despite recent profit-taking events. Regulatory environment. U.S. cryptocurrency legislation faced procedural hurdles as the House Freedom Caucus raised objections during voting on key digital asset bills, creating temporary uncertainty despite bipartisan support. The three major bills advancing through Congress, the Clarity Act, Genius Act, and Anti-CBDC Act, are expected to be voted on later this week, with potential implications for the regulatory framework governing digital assets. Geopolitical risks, trade policy, tariff escalation. President Trump significantly intensified trade tensions by announcing 30% tariffs on the European Union and Mexico, effective August 1, 2025. These measures follow earlier announcements of tariffs on Canada, 35%, and represent a marked escalation from the previous 90-day negotiation period. The administration also confirmed a 19% tariff deal with Indonesia and signaled additional tariffs on pharmaceuticals and semiconductors. Global response. The European Union threatened countermeasures affecting over 100 billion worth of US imports while maintaining hopes for negotiated solutions before the August 1 deadline. EU Trade Commissioner Maroš Šefčovič described the 30% rate as almost impossible to maintain and warned that it practically prohibits trade. The EU has prepared retaliatory tariffs covering goods worth 72 billion, 84 billion, including aircraft, machinery, and agricultural products. Economic impact. Trump's tariff campaign has generated tens of billions in new revenue for the U.S. Treasury, with customs duties surpassing 100 billion in the federal fiscal year ending in June. However, the escalating trade conflict has created uncertainty for global supply chains and contributed to inflationary pressures in consumer goods. Commodity markets. Energy sector. Oil prices showed mixed performance with WTI crude trading around 65.9 to 1.55% and Brent crude at 68.28, 0.63%. Natural gas futures gained 1.12% to 3.51 per MMBtu, while gasoline prices declined 1.56%. Energy markets face headwinds from demand concerns and geopolitical tensions affecting global trade flows. Metals, precious metals. Gold reached new highs at 357 per ounce, plus 0.62%, reflecting safe haven demand amid trade tensions and geopolitical uncertainty. Silver declined slightly by 0.18% to 38.04 per ounce, while platinum gained 1.4% to 1,433. Copper prices fell 0.94% to 5.53 per pound despite earlier spikes following tariff announcements. Economic indicators. Inflation data. The Producer Price Index (PPI) for June remained unchanged month over month and rose 2.3% year over year, below expectations of 2.5%. This favorable reading contrasted with Tuesday's Consumer Price Index, which showed monthly inflation of 0.3% and annual inflation of 2.7%. Core PPI, excluding food and energy, also held flat on a monthly basis and rose 2.6% annually, down from May's 3.2%. Employment. The unemployment rate remained at 4.1% in June, with initial jobless claims for the week ending July 5 decreasing to 227, down 50 from the previous week. Labor market conditions continue to show resilience despite ongoing economic uncertainties and trade tensions. Corporate earnings. Banking sector. Major banks delivered strong second quarter results, with several institutions beating analyst expectations. Goldman Sachs reported earnings of 10.91 per share on revenues of 14.58 billion, well above estimates. Morgan Stanley posted earnings of 2.13 per share on net revenues of 16.79 billion, up nearly 12% year over year. Bank of America reported earnings of 0.89 per share, slightly ahead of expectations. Trading revenue showed particular strength across institutions, benefiting from increased market volatility. Healthcare, technology, Johnson reported strong second quarter results with earnings of 2.77 per share and revenues of 23.7 billion, exceeding analyst expectations. The company raised its full-year guidance, citing strength in its pharmaceutical and medical device divisions. Technology sector earnings faced headwinds from semiconductor equipment maker ASML, which warned of potential flat growth in 2026 due to tariff uncertainties. Strategic implications. Investment outlook. The convergence of strong bank earnings, favorable wholesale inflation data, and ongoing trade tensions creates a complex investment environment. While financial institutions benefit from increased trading activity and potential rate cuts, broader market performance depends on the resolution of trade disputes and continued corporate earnings growth. Risk management. Organizations should prepare for continued volatility driven by trade policy uncertainty and geopolitical tensions. The significant tariff escalation targeting major trading partners suggests ongoing market disruption, while the potential for Federal Reserve leadership changes adds another layer of uncertainty to monetary policy expectations. This briefing synthesizes trusted financial sources as of July 16, 2025. Markets remain dynamic and subject to rapid changes based on trade developments, earnings results, and monetary policy decisions.